Hi, this is Kim Watson. Welcome to this week's Big Picture. So, Big Picture, I'm just going to do it in the order I did it last week. Just quick summary here, which are the strongest, which are the weakest currencies. There are some changes going on here. Certainly, I could have possibly looked to draw cable even stronger now. It may be starting to, if it can get any deals, it'll be leapfrogging these and maybe even the euro at some point. So just be cables on my sort of say mildly warm list, I would say, as with potential. Now I'll come through some detail on that in a moment, but in the meantime, what else have we got here? US, well, US remains the strongest there. Canadian dollars maybe slipping back down again. It's had a good period, and fundamentally it's got some good economic strength. It's the sentiment's been reasonably good with it. Everything's reasonably good with it, but not really seeing the had the best change over 3 months. This could be slipping off quite quickly. Although it's not really sold off massively, and the yen's still the weaker one of the two of them, but it's not doing as well as it could do. And I said this last week. I was a little bit hesitant about it. I remain hesitant about the CAD. I remain bullish towards the pound. I remain bearish towards the euro. In fact, I think the euro could slip down the slope. The only thing really upholding this is the sentiment, and I may have to change the whole weighting on this because it's really that could be, as I say, slipping down. We're already seeing the signs of the bullishness coming off there anyway. Right, so there's no further to do. There's the summary. There's the strongest. There's the weakest at the moment. Be wary of the pound. Let's have a look at the detail behind the fundamentals, and particularly looking ahead to this week, which is a key week ahead. We've got 3 central banks and one set of minutes. So if that wasn't enough, there you go. Let's start off with the central banks. We've got to look at the US central bank. The Fed Watch tool. A 25% cut is pretty much expected and priced in, but there's only a 34% chance of another cut in October. So that's dropped. I'm going to show you this because I think this is pretty important as we look. So this is the Fed Watch tool. It gives us the probability of a rate cut, and this has fallen. In fact, I'm going to compare where it was in previous months here, or periods here. We're looking right back to a month ago, 16th of August, where it was in this light blue. Then 9th of September, it got almost 100% probability of a cut rather, and then it's dropping down. I mean, it's still above 60%. I don't think there's anyone that thinks that they will not cut it. Well, obviously 34% people do, but either way, the probability wise is pretty much priced in, that 0.25% cut. But it is getting a little bit more hawkish in terms of expectation, at least. And if you look here and you look at the results, this is October's cut rate, chances of the rate cut. It's actually way back at the beginning there, 16th of August. It was absolutely plumb for dropping down another 0.25%. Now it's still in the current situation, this dark blue, it's actually got more probability of staying where it is. And this is well, we'll see. It's just that things aren't as bad as Trump would like you to think it is, and he admits the economy over there is doing well, and it may be that we're reaching, or may have reached, the cut here. Now again, looking forward to December's chances of a cut. Way back it was looking really likely it was going to be on its next cut by then, but that's all fallen back, and okay, may see another cut, may not see one in October, may see one in December at this rate. This is what it's almost showing here, so just bear that in mind in terms of it's not what's necessarily done on this occasion, it's what's said that's on this occasion, so bear that in mind. So that's the Fed meeting on the 8th, 7 o'clock in the evening, and press conference 7:30. So important day there for the US dollar, and we'll certainly I've put the equity market on the back there. There's a little bit more of a bounce there in terms of what's going with money. The hedge funds are still bearish on the equities, but I'm getting more bearish. But there we are. So that's the dollar. The euro. I want to say the pound. Let's get this. We'll leave the pound for a minute. The euro. Okay, so it's gone to effectively a negative 0.5%. The base rate itself is 0.0, but the bank rate is minus 0.5 now. Now, important and interesting, sort of interesting if you find these things interesting, was that we saw the drop as the announcements were made, and then we saw the pop, drop and bounce. Maybe it's a dead cat bounce. I think it was a dead cat bounce. I went short on the euro earlier on today and sort of wished I'd held on to a short on the euro. Personally, I've said for a long time, it's a flawed currency. We're really seeing it. Basically, Draghi, well, he's run out of job, but apart side of running out of job, he's also run out of things that they could possibly do in real terms. What could they do next time? There's a thought that the quantitative easing will be increased come the next meeting, potentially, or in December. Cut rates can't really cut them much more negative. It's not really doing anything. There were people that were against this because some of the members were against it because they don't believe it works more than they think that the economy is in a good place. They don't think the economy is in a good place. I don't think any of the European leaders, financial leaders there, are suggesting the economy is in a good place. But what Draghi did do was request for fiscal stimulus. That, in other words, the countries that have budget surpluses, such as Germany, they should start spending, which in turn would cause some proper growth, maybe, as opposed to this sort of quantitative stimulus, which is not doing much at all, realistically. Without that fiscal stimulus, and it's looking like they're really running out of tools. Nothing really out this week for the euro. Hedge funds are still selling off. You can see that we're getting almost to a net flat position, not too far off. It's only 30,000. 29,000, 31,000 positions difference now here, positive. This is getting net. This is okay. The asset managers crept up, bought a few more, or went net long a little bit more, but that might all change. Overall position bearish, weekly, daily, and trend wise as well. The pound then, we've got the Bank of England meeting. I don't think much will happen out of that. Well, nothing is expected to happen out of that. I think it will all be talking about Brexit. If anything, I think some of the figures that are coming out have been looking a lot better than some expected, although some are looking a bit iffy. So it's a bit of a mixed bag there. We've got inflation out on the 18th, which will be quite key. Very key retail sales, see what the consumers are doing here. And then, of course, the Bank of England on the 19th in the midday there. So, but there's no speech this time, so there's no expectation of any changes either. Trend-wise, the pound's weekly it's still in that sort of downward trend. However, it still looks like it could be pushing up from a daily perspective further. Dollar yen. Next changes, Bank of Japan conference this week and statement due on the 19th. No changes were expected. What we're seeing here with the sentiment from the big money, though, is suddenly starting to get a bit negative on the asset manager's point of view. They never were massively bullish on the yen, let's put this right, but they've gone back into negative territory, net negative territory. Hedge funds maybe favour the yen a little bit more because of the way the monies have been running to it when risk's off. Overall, it's a bit of a choppy downward trend, big picture, but choppy-ish mesh now on mess even sitting there. Aussie dollar. Overall here, fundamentally, well, from the central banks, pressure increasing for cuts, but that's not happening, and we won't be seeing anything. We'll just see the minutes of those that last meeting on the 17th, so that's tomorrow. Asset managers money just really quite flat, and hedge money coming out. And if you look at the Chinese growth figures, which were the worst for God knows how many, I think it was about 2006 I saw it. It was quoted by Reuters as 27 years, but they obviously didn't look at the numbers, because it was, I think it's 2007 or 8. It was slightly worse for a little while. So there we go. Aussie dollar. Talking of Aussie dollar, I've just got to show you this little clip here. Now this is one of our members of our community based in Australia. This was his view today when he was sitting in the car waiting for the traffic to move, and there was a couple of snakes there. Now there's a few things you've got to observe from this picture. Hopefully it comes out well on the video. Guy, nice high-vis top there and safety boots, which is very good to see. I like health and safety in Australia. There we go. Move those out of the way. No problem. Now, do you notice the overtaking spots? They're really narrow, aren't they, in Australia? Anyway, on that note, thought I'd share that with you. So that's Australia. Anyway, struggling. I've got the trend still edging up, but that could be switching over more, and I'm just waiting to see that roll over a little again. Canadian dollar, it's remained, there's the hawkish sort of comments were in September. There's still an expectation come next month for a cut, but most things are looking okay. It'll be interesting this week. We've got inflation on the 18th, retail sales on the 20th. Yeah, so just watch for those this week. Choppy, downward trend still on that weekly, just about choppy on the dailies. It's got a bit messy, and I expected with this oil situation, which I was going to come on to, but I may as well cover it now, because I would have expected the Canadian dollar to do better than it has. This morning I didn't, because I hadn't heard all of the detail, and I really expected oil to just drop down this morning, and because they said they were going to be back to normal almost by the end of today. But it turns out it's going to take a bit longer than expected, and even with pumping extra reserves, and the US releasing their key strategic reserves there, it may still mean there's a push up on the price of oil, which I'd have expected that to come through on the Canadian dollar, and it may still do, but not looking fantastic. New Zealand dollar, okay, we haven't got a meeting. GDP this week on the 18th. This would be key to see where things are going. But at the moment it's looking pretty negative. I'll keep on talking about this, still haven't got quite as negative as they have been, and the technicals have certainly dropped back down negative as well. Okay, I've already mentioned the futures there, S&Ps, asset managers, money going back in there a little bit. It may go back more in there, but it really is a question of where to put your money at the moment. So that's it. That's the fundamental situation with what to look for this week, where the big money is going, or where it's not going, or going away from. Let's quickly look through the technicals. I'm going to start off with the euro very quickly then. So euro weekly looking bearish, just continuing this bearish trend. As I said, I sold it today in our trading room. Didn't hang on long enough. I was looking for the weekly pivot. It went beyond the weekly pivot and some. I thought we might have seen a little bit more, or held up a little bit. I was seeing signs it may have held up at that stage, but no, it's looking bearish, and I think we may see these lows taken out maybe this week. So bearish outlook on the euro, technically, fundamentally, and any other way you want to be, bearish on that. Okay, the pound, it's just run into its weekly 21 here, still bearish in this bigger trend line here, so it remains bearish from that perspective, but it's done pretty well here. It's come short of its daily 100. It's testing and holding around its weekly pivot at the moment. It's technically and statistically, to get past its monthly R3 is not normally seen, and below it's not very often seen, although we saw one a couple of months ago. So who knows? it's with the fundamentals. If Boris can pull something off and some sort of deals talked about, we could see this going back beyond the 200 and maybe seeing quite a significant rally in the pound. I would expect a 300 to 500 pips pretty quickly if there's some sort of deal agreed. So there is that positive outlook there. The no deal's been taken off for now, and it may be an extension, and all of that may just see us boiling around, not doing too much. We'll see if Boris can get us away. If he pulls out with a no deal, I think we could easily see 300 to 500 pips probably going the other way. Maybe 300 pips ish. Maybe the parity would be on the line. A good 200 pips. We'll see. But anyway, it could be well and truly bearish there. But for now, I'm remaining bullish. The dollar yen, it's still arguably still in a downward trend here on the weeklies. Not managed to do too much here, but looking just at this weekly picture, I'm looking at this and thinking, well, that's got a chance of pushing up, maybe down back towards its 50 moving average there. It certainly looks like it now, unless we see something really coming out of the Fed or the Bank of Japan. This looks like, as I say, it could be softening more. This is the way it goes. There was a divergence last month there. We saw it consolidate, push through. Last week it pitched up at most days there, pushed up. Friday it just didn't really hold on to too much. It just consolidated. Gap down on the risk off. But that's come back in and we've pushed through. So yen more upside in my book, but it may not be the cleanest and easiest of moves. Aussie dollar, already mentioned this. I think it's more risk to the downside. It's running on a weekly basis here back, and looking bearish to me. So still remains on that bearish side on the weekly, and looking at it on a daily basis. Okay, that MACD is not showing any divergences or anything, but there wasn't any, isn't anymore. I was looking across the signal there to see if there was any divergence, but I still think is the potential for this to soften up, and I'm looking at it on lower time frames, and there are divergences, and it's just whether it breaks back below that daily 50. If it starts breaking beyond there, well, yes, the 21's pointing up, may give it some support, but with all the numbers coming out, and we'll see what the minutes do this week, but it looks to me like downside is got the hang of it at the moment, or hold of it. The Canadian dollar, well, it's not really done too much. It dropped down nicely at parts last week, then gave it back, and it's sort of a bit disappointing. As it sits at the moment this week, it's just not really done too much. I thought we might have seen a rollover with the data coming out, but no. May still see it, and as I said, if we get any more delays, any more attacks or anything like this, of course it may bring the Canadian dollar down, but at the moment it's not really benefiting too much. And you've got to remember the US is quite a provider, a producer of oil itself now, so it's possibly holding up against that for that reason as well. Finally, the New Zealand dollar. So New Zealand dollar looking weak on the weekly basis. I mentioned this last week, running into that 8, and it's running to the 8, sold off a little bit. Still got further downside in my book here. It's certainly looking weak. It held up for quite a long time, to be fair, into that level. But it's rolled over the last couple of days, and I think we'll see again further downside. So that's pretty much it. Hopefully I've covered everything I had in my brain, or I had on my notes. Yep, I think so. I wish you all a great week, and be careful of all that news out there. Take care. Bye for now.